Hello, everyone. Today is Friday, February 13th, and this is your 314 SMI investor update for the month of February. Fernando, how are you doing?
Doing well. We've had a crazy start to the year here. Let's review what happened in January across the funds.
The theme of 2026 so far is dispersion. We have dispersion across assets, we have dispersion within the stock market, and even at the stock level. So far this year, including January and into February, it's been um, a good period for the family of 314 SMI funds. So let's start with the real asset allocation fund, ticker symbol RAA. That's where we start for the month of January. RAA returned 2.8%. 60/40 was up 0.9%. This is our classic chart that we always show as the first for these investor updates, where we break down the source of returns from each individual asset on the left-hand side, and then from the broad asset class on the right-hand side. And what you can see, and there's a big divergence between RAA and 60/40 this month. What drove that divergence, you can see really three big categories: gold, metals miners, and managed futures. So these are all sources of the alternatives bucket that we categorize as alternatives within the real asset allocation fund. And that was it was a good month and this has been a good year to have exposure to alternatives. You can see that on the right hand side because the alternatives is accounting for, looks like, more than half of the gains for the fund, even though our benchmark is about 20% alternatives, and we were slightly overweight for the month of January. And so that is what worked. The only thing that detracted from performance in January was the Bitcoin position. And so obviously there's been a real rough market in crypto this year. Let's look at the next slide, which is a look ahead for the month of February. So that was January, and that's how uh, how we were positioned in January and what drove performance. For February, the model has stayed with the gold and miners overweight, and we've already had a lot of volatility early in the month on gold and miners. But it's also dialed up the Japan equity overweight. That's been a good position for the fund, and is underweight certain slices of the fixed income market. Specifically, it's underweight investment grade corporate bonds. And so you can see that on this table. This table goes month to month. It's a monthly rebalanced fund. And you can see our benchmark for each asset weight. And then the January 30th. So that's the rebalance that's effective for the month of February. And you can see how we're positioned there on this table. So that's the RAA fund. Let's go to FCTE. FCTE, to remind everyone, is a 20 stock quality based quantitative fund, and it's based on a model. The model scans the S&P 500 for the top 100 quality stocks and then overlays a trend system that we find to be specifically tailored for the quality universe. And so last year was a tough year for the model, but this is a new year. Last year was a tough year for quality. It was a tough year for equal weight. It's an equal weighted fund that's based on quality. It's unsurprising that it struggled last year. Now, what is encouraging is that so far this year, FCTE has rebounded strongly, beating equal weight and beating the quality benchmark as well. So the stock selection of the fund is working. You can see here in January, FCTE returned 7%, beat the S&P, which had returned 1.4% for January. You can see on the left-hand side a lot of AI infrastructure names that helped the fund here. There was a little bit of the software debacle that we were caught up in with Microsoft and Cadence there in the red. You can see those are the two detractors, but overall it was solid stock selection. Lam Research, KLAC were both big winners there. You can see on the right-hand side, the sector exposure and sector returns. You have technology, industrials at the top of the list there, powering returns for FCTE. So far, so good in the month of January. We're hoping to have a better backdrop for quality, a better backdrop for the fund. Fernando, you have anything to add here?
Yeah, just pointing out that we cycled at the end of January in FCT a little bit out of some of the tech names and more into the healthcare names, a little bit more of a defensive tilt, which, given how February's shaking out, might not be a bad move here. So,
Yeah, broad market commentary, we have been bullish for a long time, and now we've entered into a consolidation phase on the S&P 500. The Nasdaq is also consolidating, but looking weaker. And so it's something we're monitoring for our research clients at 314. The healthcare tilt probably makes some sense in that backdrop, and then you factor in the seasonality. Second half of February is one of those weakest. If you split the year into 24 periods, it's one of the weaker periods within the year. So something to keep an eye on. We're not going to be, we wouldn't wed ourselves to seasonality, but it's always something to keep on your dashboard. So that's the update for the month. Uh, as always, appreciate everyone out there watching. If you have any questions, you can contact us on the information at our site. Until next month, have a good one.